Welcome to our weekend market analysis. This analysis for April 18th, 2026. Well, we are living in a world of tweets and X's and um, Trump media. It depends on who is tweeting the most, and that's what is driving the markets at this time. So it is very fluid. It depends on all the events and the news, and we can see how all the assets risky assets move together, such as obviously the stock markets, even cryptocurrencies, even gold, and how the defensive assets also are moving. In this case, our guidance has been through the crude oil and energy sectors. So again, it's very fluid, so be careful. uh, Protect your uh, portfolios. And again, if you need to take some profits, take some profits. We've come a long way from what we talked about last time. We said, is this a deja vu? It was end of toward the fourth week of March. It looked like is it happening again, what we did last year? So we had a nice leg up, and we will go more in details from the technical point of view. And I mentioned we have hit all-time high, or is this the double top? Are we at a resistance, or can we go through this? So very crucial week. Last week we had the PPI, which came better than expected. Also another reason for this move to some of the markets are hitting all-time high is the gamma squeeze, and mainly because of the retail's call buyings. A lot of option buying are pushing the markets to these highs. Last week we had the financial and banking earnings, and this week, well, look for earnings from Tesla, Intel, IBM, and quite a bit. Again, we are in the earnings season, so we want to pay attention to that. Also, we've been talking about the Bitcoin consolidating for a long time, and we just broke above our consolidation zone. So we want to see if this has any legs. And again, a risky asset. So are we in a move to higher high or a higher uh, zones in the Bitcoin, higher prices? This week we also look at few ETFs. A couple of weeks ago I mentioned about the semiconductors. We also look at the financials, where they stand after the earnings last week, and how about the energy sector? So let's move on. Before we do that, again, look at what has happened with the cryptocurrencies, how the markets have moved in just a 7-day change, almost 5%. Really aggressive move. Um, Last week, the only really it was a very light economic news. The big one was the producers price index, which rose 0.5% in March. It was actually better than expected. February it, had risen 0.5% and 0.6% in January. So year over year, it was 4% in the 12 months. And that's the largest since February 2023. Now, the main thing came from the goods, was up 1.6%. The services were really unchanged. So obviously, 8.5% increase in energy prices were a big factor. And our when we look at the uh, goods excluding food and energy edged up only 0.2%. And the food prices actually declined 0.3%. So again, majority of the rising prices came from the gasoline prices at 15.7%. There was a 1.3% gains in transportation and warehousing, which makes sense. And services excluding trade and transportation warehouse was up only 0.1%. It was offset by the decline of 0.3% in trade service margins. The core PPI, which excludes the food and energy, rose 0.2% on an annual basis, up 3.6%. So this week again, we are light. We have the core retail sales on Tuesday, and this is interesting. We have the Fed chair designee. Uh, uh, Warsh is going to be testifying, getting ready, well, if it's approved for his after May. We'll see what happens. And well, we got Great Britain. We also have the CPI in on Wednesday, Great Britain. So what we see how the yields have come down in UK as well as our 10-year notes, and we are actually doing better than where we were 30 days ago. So what kind of a week was it? Well, it was a fantastic week. It's again a lot of news. What we're talking about, the ceasefire and how the but supposedly the markets, I mean, the Strait of Hormuz was open. The oil prices dropped 13.55%, went to $83 for the week. The markets reacted nicely. The Dow was up 3%, NASDAQ close to 7%. Uh, we'll see how the Magnificent Seven did. S&P 500 was up 4.5%. Gold continued its climb from a couple of weeks ago, close to the stock market, up 2%, and copper was up 3.7%. So Dow is down 1.48% from its this year's high from February 10th. On the other hand, what we see from its 27 March low, it's up almost close to 10%. S&P hit the all-time high. NASDAQ hit all-time high, and basically it's up almost 18% from its March 30 lows. Now, what we see here, oil has dropped 26% since its April 7th high. So the markets overall did 4.66%, while we see the large cap growth, they were up 6.9%. The mid cap was up 4.29%. The US small cap was up 5%, especially the growth, it was up 7%. So, when we look at all the, um, as far as the indices, remember we were just talking about the moving averages not long ago, about the 50-day being the resistance, but now what we see here is all of them basically have nicely broken above, sorry about that, above their 50-day moving averages, have gone up very nicely. We also see the dollar has gone the opposite way, what we see with the yields, and basically has broken below its 50-day moving average. Um, Understandingly, we see that the commodities broken below their 20-day, crude oil below its 20-day. Now, gold we've talked about in a kind of a no man's zone, and we broke above the 20, but we are challenged at the 50-day moving average. And we see VIX, how it has broken below its 50-day. Um, the biggest winner in the sectors, it has been the real estate and the REITs. Look at this huge, nice move, broken above the 20 and 50. We see the technology, a big, big winner. Then S&P has been strong based on relative strength. Then the communications, we have the discretionaries, another big move. Financials had their earnings last week, and we'll have some this week. Coming week, big move. Industrial broke above their 50-day. We have basic material. Healthcare is its own zone, sandwich between the 50 and 20. Utilities, the same weakness, but that's broken above the 20 and 50 and stayed there as a support now. And well, staples, defensive sectors, just broke above the 20, but very weak. And then energy, understandably, what has happened with crude oil, a big drop. As far as international, we see the big winners are Taiwan, Austria, and Italy. From relative strength point of view, what we have is the weakest markets are Hong Kong, Malaysia, and Mexico. Now, let's talk about sentiment and what has happened. That it's very interesting. This is as of Wednesday. Remember, the news came that the peace deal is going, the Strait of Hormuz is going to be open. But at that time, we had the bulls were below average again, but by a little farther than the previous week. They're only 32% positive bulls, and the bears were way above average at 43%. But this is a better indication, the CNN Fear and Greed Index. This is as of Friday. Not long ago, a few weeks ago, we were just at extreme fear. Remember, again, the sentiment. Then we went to a little higher extreme fear, and then neutral. And now we are at greed. So be careful because now all the good news, and I mentioned about gamma squeeze, which we'll talk in expected move, what is happening. So we are at 68 and our technical has improved, but we still not there. It's very interesting. We're hitting all-time high, but only 48.9% of stocks are above their respective moving averages. So let's take a look at the charts. Again, not long ago, end of March, we were below the 50, 21, 8-day moving average. And what has happened, we have nicely, completely broken above those. So it's a very, very strong move. But when we look at the Fibonacci, and I've been, again, it's been a few weeks, I'll drawn these lines, and you see how the technicals again work. This was our support going back to November, and we broke below that. Where did we go? We went to the highs that we had hit about August or so, and we held it. Big bounce back. Continued to go. I mentioned last week about the 138.2, and here is our double top. We broke above this. So it is, we have broken that resistance, but we need confirmation. I've said it before. Once we go through that, then we should be able to hit that 1278. So we'll see if at least we will have some retracement in this area this coming week. We also looking at the linear regression channel, and again, how nicely we have gone from the negative to standard deviation with this all momentum changing colors, 8 waves moving positive. Now we are all the way to the positive to standard deviation. So will we have some pause right here? And we have from the move on the Bollinger Bands, we've been hugging this Bollinger Band. We broke above the 100-day moving average. We are embedded and MACD is positive. So momentum is positive. When we look at NASDAQ, similar story to, again, to S&P, negative to standard deviation, all the way to positive standard deviation. Again, are we in a double top? We can see that we are right there, broken above that a little bit. We need confirmation. Similar to S&P, broken above the 100-day, embedded stochastics and MACD is positive, but we look at these Bollinger Bands way open. On a weekly basis, I've been a few weeks ago, I mentioned about the 100-week moving average as a major support. And we had gone back, remember in April, we actually broke below that, bounced back and forth, and finally broke nicely above that. And here, what we have is we bounced off that 100-week. And now MACD is about to cross. So that's strength and weekly. On Russell, similar story. We were in a squeeze, by the way, and we fired a wave as positive. Again, we have broken almost a double top, needed confirmation. and we are in a 2 standard deviation. Similar story, 100 days, stochastics positive, MACD is positive. And when we look at Dow, again, we have broken above the 100-day after hugging it for a few days. Stochastics positive and MACD is positive. So it would be interesting maybe retracing to this 100-day and then bounce to hit the all-time high. On a weekly, again, as you can see, how the 100-week provided a nice support for us. As far as mid cap, we see again the stochastic embedded, MACD is positive above 100-day moving average. The transportation, a nice move above 100 days embedded, MACD is positive. We have a nice doji outside the Bollinger Band, but we came back and just hugged at the Bollinger Band. VIX. Last week I mentioned this whole drop and going below the 100-day moving average. That was positive for the markets. Well, we kept it, but we are right in this support zone on VIX. We are embedded in stochastics. MACD is negative. Those are all good for the markets, but VIX is sitting on this my support zone. So we'll see if that will have a little bounce, which will be negative for the markets. On a VVIX, again, we have broken, by the way, below the 100-day moving average. We are embedded. MACD is negative. So that shows us the volatility is down. Um, let's see, we have the yields. And yields have come up down nicely after hitting the upper edge of the Bollinger Band. Now we are touching the lower edge of Bollinger Band, and just be aware that we are oversold, although MACD is negative. As far as the weekly, though, this is what we want to be concerned. We are sitting right on the 100-day moving average support, and 18-day is coming. So we'll see if we can just resolve this, or will it be bounce and that yields could go a little higher. This is our 10-year note. We are in a squeeze, by the way, but we have broken above the 21-day moving average. So A wave is positive, although the C wave, the longer term, is negative. We see that we are under 100-day moving average. We are becoming embedded, and MACD is positive. On a weekly basis, very crucial, we have just bounced above the 100-week moving average. So MACD is still negative. We need this to move above this, and we mentioned about the 100-day. The 30-year bonds are below their 100-day, and we need really a lot of strength, and we are overbought. As far as the 30-year bond weekly, we can see again, we have the 18-week and 100-week moving average as a major resistance. The dollar has broken below its 100-day moving average. That's, again, the concern about the war has subsided. So that's the big sell-off. And I had mentioned again, this is my 100 zone. And basically what we see is we just couldn't break above that. So we have been rejected. Now we have broken below 100, embedded stochastics, and also MACD is negative. So as long as we are below this, the markets will react positively, and then obviously the gold will also react positively on a weekly basis. Again, you can see we couldn't break above that zone, and 100-week moving average momentum is down, and MACD is positive, but it's heading down. On the other hand, the opposite is true about the euro. We have broken above the 100-day moving average, embedded stochastics and positive MACD. And gold, as we can see, we are above the 100-day moving average. With a weaker dollar, obviously that helps. And we are embedded in stochastics and positive MACD. Silver also very similar to gold. As far as copper, a nice move, broke above the 100-day and expanding Bollinger Band. And again, positive MACD and the stochastics is embedded. Bitcoin. Let's spend a little time on Bitcoin. We had talked about, again, there's a consolidation going on, um, going back almost the beginning of the year when we came down and we've been sandwiched. And now we've gone from negative to standard deviation. We were in squeeze. I've been talking about this squeeze for a while, and the squeeze just fired. And now we are close to the positive. But then we can see the slope is positive, so that's important. Also, on a weekly basis, you see on the Bitcoin this past week, we broke above our trend line. So let's see if we can have a follow through. MACD has turned positive, so there are some positive news coming out about a Bitcoin. Um, I've talked about this zone from 60,600 area to 74,500 area. We have this past week, we broke above that. Now, our big challenge is that 70, almost 79,900, almost 80,000. We like to break that. The stochastics is embedded and MACD is positive. On a weekly basis, again, we are against that 18 weeks. So um, we like to see if we can move. I mentioned again, MACD just turned positive. So once we break above this, and then the next zone could be 94,000 area. Crude oil, the opposite of everything else. We can see how we had these two dojis. I had mentioned about that, and we broke down. And where are we now? The $79 has been my support, so we are right there. So we'll see. We are oversold, although MACD is negative. Could there be a bounce right here on the support? And that's what we want to pay attention to. On a weekly basis, the same thing. And one thing we noticed, though, um, the, the divergence on the stochastics, you can see how we were making higher high, but stochastic was making lower low, just a heads up. So that's, again, telling us as far as the the uh, the power of technicals. As far as one thing, just cotton reminds you of cocoa of last year. Big, big move in cotton. What's going on? Just an idea, so you can see how nicely this has moved. All right, let's talk about expected move. Well, look at this move. For almost 11 weeks, I think I mentioned we have not gone outside our expected move, and all of a sudden we've been going way outside. And here, this is, I think, one of the biggest moves we had on expected move. This is S&P, and basically what has happened, this is the gamma squeeze. So the retail, just briefly, the retail investors have been bullish after the good news. They're buying the calls, and the market makers, they have to protect themselves because they're selling those calls. They have to be neutral. So basically, in order to protect themselves, they're going and buying the futures market. And by buying the markets, they're pushing the markets higher. And this is a nice indication of this is one of the highest moves we've had outside the expected move, I think, in many, many years. So we are, this was a gamma squeeze, similar in NASDAQ, similar in Russell, and even the Dow, the last day had a big squeeze. And then on the other hand, the bonds actually stayed in the middle. We see gold hit the upper edge of expected move, silver hit the upper edge of expected move, but the financials after earnings, similar pattern, went outside the expected move. Energy went opposite on the lower side, and then obviously crude oil way outside this expected move, and Bitcoin a little bit outside this expected move. I hope that was helpful. I We'll move on to our trade of the week. I hope you will watch that as well. So, thank you very much. Talk to you soon.